The fixed deposit interest rates in India currently stands around 5%. In the last many years, the rate of FD deposits has been coming drastically down year after year. Anyone who has an idea about what has been the interest rates in India during the last 20-30 years will not miss this trend of falling interest rates over longer periods of time. This has serious consequences for the retirees and a lot many people. In this episode on NRI Money Clinic, we are going to discuss all aspects of falling interest rates, what can happen going forward, how you can protect yourself from the falling interest rates. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
People of my generation know about this. India in 1970s, 1980s until about mid of 1990s had pretty high interest rates on the fixed deposits. Between 1985 until 1995, the prevailing FD rates were in the region of about 14%. That is not something to feel very happy about. At the end of the day, the interest rate is a reflection of inflation which is prevailing in the economy. Interest rates are decided by how much inflation is there, and the interest rates have to be slightly higher than the prevailing inflation. But after 1995, the successive governments worked very hard to bring down the inflation, and consequently the fixed deposit rates have also started coming down year after year. In the year 2006 and 7, the interest rates were somewhere in the region of 5.5 to 6%. Thereafterwards, somewhere between 2010 and 2014, the interest rates moved up to 9%. Thereafterwards, the interest rates are only coming down. Currently, the RBI maintains its repo rate around 4%, which means to say the low interest rates are here to stay. Recently in the RBI policy, Reserve Bank of India said they are going to maintain accommodative policies for as long as it is required. It only means to say the low interest rates will remain in India for longer than expected. Probably it is safe to say low interest for long term is a new normal in India. Why are the interest rates are so low in India now? As I already said, interest rate is a function of underlying inflation. In the last 4 or 5 years, inflation is just around 3 to 4%. During the pandemic, because of supply constraints, inflation would have picked up a little bit, but that can't be seen as a long-term average. When the inflation is down, obviously the interest rates will remain low. In an economy, why does the inflation remain low? Inflation can remain low because there could be a lot of supplies, or there can be a lot of saturation, which means all the things that people need, they must be already having, and the demand could be sluggish. That could be the reason. In an Indian context, over the years, because of the development of economy and the development of agriculture, a lot of things are available today in plenty, which means to say the supply side inflation is lesser. Likewise, a developing economy needs to maintain a very low inflation rate. If inflation is very high, it will affect the low income group which is there in a country. Likewise, when the inflation is very high, the borrowing cost for the businesses will become very, very high, and the businesses will become unstable when they have to pay a large amount of money as interest. So a low interest regime, a low inflation in the economy favors the businesses, favors the development. That has been the approach of government and the Central Bank of India. As a result, the interest rates in India has been coming down over the years. What can happen in future? In the future, one thing that needs to happen is the development. If the development has to happen, the interest rates or the borrowing costs for the businesses have to be kept low. Businesses can have low cost of the capital only when the inflation is down, or only when the cost of the capital or the FD rates remain low. So the government and the central banks have worked hard to keep the inflation down, and this will be very supportive for the development. And when the development happens, the supplies will improve, the shortages which may come in the economy will come down, keeping the prices low. Likewise, one factor which was driving inflation in India was the imported inflation. What I mean to say is, if the exchange rate to rupee to dollar is unfavorable, then the goods that you import from outside of India will add to your rise in cost. Now, with the Atmanirbhar Bharat trying to be self-reliant and trying to be generating energy resources using the renewable energy within India, these are all the things which will ensure that the inflation in days ahead could be really low, and which only means to say the interest rates in India will also remain low for long periods of time because of the development, because of the supplies, because of the stability of its currency, and it is visible for everyone to see as of now. When a country starts growing and developing, obviously the interest rates will keep falling down, inflation will keep falling down. That has been the experience of the countries worldwide. You look at the developed world, you look at Canada, you look at USA, you look at the Eurozone, UK, you look at Singapore, Australia, Japan. Where are the interest rates? They are closest to zero. In some countries, there are negative interest rates. Some countries, they are way below 2% level. Today in US, the interest rates are at almost at 0% level. Over many years, 5, 10, 15, 20 years, when India too develops, India will also go through the similar kind of a regime, which means falling interest rates will be a new reality, and it is going to affect a lot many people. There is one section of the population which gets benefited from low interest rates. That is the business community, which wants to borrow money, is able to borrow money at less cost, they will be benefited. Likewise, if you are a consumer, if you want to take a housing loan, or if you want to take a consumption loan, or you want to take a personal loan, or if you want to travel using the loans taken from the bank, then you will be the beneficiary of low interest rate regime. While a large majority of consumption driven population gets benefited from the low interest rate, there is a section within the society which gets badly affected. The section which gets badly affected are the retirees, are the savers, and those are the people who will maintain fixed deposits in the bank. The yield that you are going to get from the bank fixed deposits could be very low as you go forward into the next 5, 10, 15, 20, 30 years. If you are a person who is in the 40s age group today, in next 20 years, you could be retiring. By the time you retire, India would have developed a lot and the interest rates could be remaining really low. Probably, my guess is that India will have a new normal of interest rates stabilizing somewhere between 3 to 4% in next 10, 15, 20, 30 years. That could be the distinct possibility. And if you are counting to live only on an interest income, that can completely shatter your plans. You need to be having plan B just in case if the interest rate remain low or India also is going towards zero interest rate regime. If you are a person who is dependent only on fixed income to fund your retirement, or if you are a person who wants to keep only money in the bank fixed deposits, you don't want to expose your money to something else, then you run the risk of getting very low yields in many years in the future. How can you protect yourself? There are two ways I can think of. One is subscribing to some guaranteed return plans right now which are available from different insurance companies. Many of these products which I have evaluated till now are looking to be very, very good plans. You could think about subscribing to some of the guaranteed return plans which can guarantee you a rate of return throughout your life. This is option number one. The other option could be you should be designing a good mutual fund portfolio which will mimic something like a fixed deposits, but not exactly the fixed deposits. So these are the two instruments which can help you protect yourself from the falling interest rates. Dear viewers, we have identified this trend of falling interest rates long back. We have already positioned the portfolios of our clients so that they will not be affected by the falling interest rate. Are you the one who is also looking for similar services? Are you the person who is overboard on fixed deposits or fixed income? If you want a strategy to protect yourself from the falling interest, or how you can manage your cash flows during your retirement years, you can make best use of our services as well. I have shown my contact number here on the screen. Through a WhatsApp message from any corner of the world, you can reach to us and we will design something special for you so that you don't have to be worrying about the falling interest rate in years ahead. Feel free to contact us anytime. Dear viewers, if you like the subject that I discussed today, please like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I will be back with you with yet another topic in yet another video very soon.